Millions of Americans are waking up to a financial nightmare. Their mortgage payments have doubled and they did not see it coming.
The average rate on the 30-year fixed mortgage today is hovering around 7%. In 2021, rates were at all-time lows.
In just 4 short years in America, the average monthly payment on a mortgage is up 96%.
With 2021's rates, interest payments would cost around $157,000. If it were financed in 2024, the cost jumps by a lot.
I pay for mortgage. My monthly mortgage is $3,332.74. Your girl just got her yearly escrow. My new mortgage will be $5,337.65.
If you locked into a 3% mortgage in 2020 and you're in a strong financial position, congratulations, you're one of the lucky ones. But if you're trying to buy today, you're paying nearly $1,000 more every single month for the same house. And here's where it gets worse. More Americans are falling behind on their mortgage payments.
Americans are struggling to pay off their debt.
We're talking about missing payments on pretty big things like mortgages, credit cards.
Delinquency rates on FHA home loans are now at 11.03%.
Households becoming seriously delinquent on their auto loans and credit cards are at a 14-year high.
And VA home loans at 4.7%, the highest in many years. But instead of tightening lending rules, the government is making it even easier to buy a home. You can now use income from a roommate to help you qualify for a mortgage.
Thanks to a new FHA update, it's now much easier to include what they call border income, basically rent from a roommate.
Think about that. Just a few years ago, lenders would only consider counting rent collected from units in a small multifamily property to help you qualify. Then they added ADU, accessory dwelling unit income, and now they're letting roommate rent help you qualify for a home loan. That's like saying you can't afford this new BMW, but your friend Sally, she'll pay you gas money. And with that gas money, now you can afford it. Congratulations, you own a BMW. This is not normal. So the real question is, why is this happening? Where is the housing market headed? Are home prices about to crash? Will interest rates stay high forever? And why are home builders panicking over new government policies?
The move will have a negative effect on American businesses, including home construction, furniture. The National Association of Home Builders issuing a warning on that, saying overall Canadian lumber tariffs will rise nearly 40%.
This is way bigger than just high home prices. And if you think this is bad, it's about to get worse. But don't worry, I'm not just here to talk about the problem. I'm going to also tell you what a great solution would be for you that you could take action on now. I'll tell you exactly what I'm doing right now to overcome what I believe is going to be a housing crisis and what you could do as well. Here's the harsh truth. Homeownership is out of reach for most Americans. The median home price is $433,100. And to afford that, you need a household income of $166,000 per year.
Millions of Americans are simply being priced out of homeownership.
The U.S. home price index is 47% higher than in early 2020.
But here's the problem. The average U.S. household income is $78,538 a year.
That's pushing the median sales price to about 5 times an average household income, which is just incredible.
U.S. Census data shows that median household incomes dropped in 17 states.
That's less than half of what is needed to qualify for a home loan. This is why home sales have plummeted to 4.3% in January, because people just can't afford to buy. Think about this. Just a few years ago, you could have bought a $400,000 house with a 3% mortgage for $1,686 per month. Today, that same house is $2,621 a month. That's an extra $1,000 a month every month over the course of that loan. And if you have a 30-year home loan, that's $360,000 in additional interest. That's before taxes, maintenance, and sky-high insurance costs. This is creating a market stalemate. Sellers don't want to sell. They don't want to give up their record low mortgage rate. And buyers, they don't want to buy.
So many Americans are being priced out of the market altogether, with mortgage rates consistently about 7% and sky-high home prices.
And now home builders are freaking out. If you think home prices are going to drop all across America, think again. New tariffs on construction materials like lumber, steel, and aluminum will drive prices higher.
When you put a tariff on a product, it is not that the other country gets taxed per se. It's that the cost gets pushed on to the consumer.
Trump's tariffs could make your next house more expensive. One of those goods is Canadian softwood lumber. If the price of lumber goes up, the cost of building a house goes up.
And the National Association of Home Builders said on average home prices will go up $17,000 to $22,000 per new house built. And builder confidence, it just dropped for the 5th straight month in a row, the lowest level in 5 months.
Home builder confidence for February also dropped to a 5-month low as builders remain cautious about the future.
It's not just the housing market that's under pressure. Across the board, companies are slashing jobs at an alarming rate. In the first 2 months of 2025, large tech companies have laid off 26,000 American workers, with major players like Microsoft and Meta issuing significant layoffs.
Well, many Microsoft workers now out of a job.
Last month, Facebook's parent company said it planned to cut 5% of its workforce.
The first day of the work week brings the final day of employment.
Even more concerning, the U.S. federal government is undergoing significant restructuring, costing hundreds of thousands of Americans their jobs.
Here at home, the Trump administration sending shockwaves through the federal workforce.
Overnight, massive cuts at another critical agency.
This could affect as many as 216,000 probationary employees.
Since January, over 30,000 have already received their termination letters. This is all part of a $2 trillion cost-saving plan. These widespread layoffs are not just rumors. They represent families facing financial hardship and uncertainty, further straining an already fragile economy. It's not just home buyers that are struggling. A record number of Americans are only making the minimum payments on credit cards, and delinquency rates are skyrocketing.
A record high number of people are only paying the minimum monthly payment on their credit card bills.
New York Fed shows the delinquency rate was more than 8%.
Inflation is still hitting household budgets.
When you say 2.7%, that's how much prices increased in America between November of this year and November of last year.
Reports show we are spending more of our income on groceries than ever before.
And people are falling behind on their mortgages. The average American family is spending over a third of what they make on housing costs alone. And in many cases, it's over 50% of monthly income. And with sky-high property taxes and insurance that continues to grow year after year, it's going to put a lot of financial strain on millions of American families. The big question is what happens next? If people can't afford their homes, what will they do? So what do you think? Will home prices finally crash? Will rising mortgage delinquencies trigger a bigger economic issue? Or are high prices here to stay, forcing Americans to rent forever? Drop your thoughts in the comments below because this will affect us all. Now we know about rising mortgage payments, delinquencies and home builder struggles, and the crazy market stalemate. But here's the most important part. What can we do about it? Because while most people will be caught off guard, the smart and the savvy are planning in advance. Now, what we witnessed in 2020 is very significant, and I believe we're going to see something very similar unfold through housing. 2020, you saw millions of people looking to relocate outside of California, outside of New York City. And they went to places like Florida and Texas, and they were chasing freedom. They were chasing a desirable lifestyle with no income tax, and they were just looking for something new. They didn't want to stay in LA and New York City with the shutdowns and everything that was happening. Well, that trend is quickly fading as inventory is skyrocketing in Texas and Florida right now as the insurance crisis gets worse. Now, what I think is going to be happening now is we're going to see an affordability migration that's going to start to take foot. Now, when you listen to what Jerome Powell said, he said in places like California and Florida, high-risk areas, high-risk states, it's going to be nearly impossible to get a mortgage.
If you fast forward 10 or 15 years, there are going to be regions of the country where you can't get a mortgage, there won't be ATMs, there won't, the banks won't have branches and things like that.
So if you think about it from that perspective, if you have California and you have Florida, where it's hard to get a mortgage and insurance is continuing to go up, well, less people are going to be able to pay all cash because you cannot buy a property in a state where you can't get a mortgage. You're going to have to pay all cash for it, right? So what's actually going to happen is I believe we're going to see a lot of these flyover states get a lot more attention, like Des Moines, Iowa, and Ohio, and West Virginia, and a lot of these different locations are going to start to attract more and more and more people. People start to, flock towards affordability. And low insurance states are going to become more and more desirable. And we're just going to start to see a lot of people looking at living different. They're going to look at their living standards differently. And I think this is going to be coming at us like a train. There's almost no way around this. I relocated my entire family from Florida to Ohio because I'm seeing this. I saw this on a trip here, and I'm like, this is the opportunity. Chasing affordability, because when you look at where Americans are right now, a good chunk of them are using buy now, pay later just to afford groceries. Can you imagine 5 years ago saying, yeah, in the future, people are going to be financing vegetables. They're going to be financing bread. You would have said, no way, not happening. Think about it. This is where it's going to continue to grow and move in this direction. Affordability is going to get worse, and people are going to be chasing affordable properties and affordable housing. If you can buy a house comfortably, you should do it. If it's where you live, that's great. If it's not, maybe get on Zillow or one of these websites and you start looking around, and you might be surprised at some incredible opportunities in another state. This is the future, the affordability migration, and it's all being built on the back of this affordability crisis. Bank of America, they recently came out with a survey talking about how people are moving to Indianapolis, they're moving to Columbus and Cincinnati, and they're moving to all these different locations because of the affordability problem. This is the future. I mean, you're going to start seeing more and more and more of this, and the smart and the savvy entrepreneurs and investors are getting in front of this, and you're going to see so much money lost in places like LA, in San Fran, in Florida, with these insurance problems that are going to continue to get worse and worse. Think about it. What is an asset worth? An asset is worth what the highest ready, willing, and able buyer will pay for it. That's it. The seller doesn't make the price, the buyer does. If you're in a market where less and less people can afford to buy, and less people can afford to pay cash, you can just imagine what that will do to single-family home values, what that will likely do to multifamily real estate, what that will do to office buildings. It's going to restructure and change a lot of things. So big opportunities in real estate, massive in the right markets. And for more information on what I'm doing, you can stay tuned on this channel. I'm going to show you a bunch of properties that I'm buying, my investors are buying. They're buying some incredible deals, and they're taking title 100% in their own name. So I'm simply just helping them source deals. I'm not taking on any new clients as of now. That might change in the next few weeks or a month. I have a lot of deals in the pipeline right now that I have clients under contract on, but I'm not going to take on any new clients until I've completely put everyone into a great deal. But for more information on that, you can subscribe and see what I'm doing, and catch you guys next video.